welcome to Kim Vietnam's monthly market report for August 2025. Market movement. The VN Index extended its winning streak for the fourth consecutive month in August, rising almost 12% compared to July. That pushed the year-to-date gains to nearly 33%. The rally was driven mainly by domestic investors, who more than offset heavy selling by foreign investors. Market liquidity also reached record levels. The average daily trading value climbed to $1.9 billion United States dollars, which is 41% higher than in July and almost 3 times greater than 1 year ago. Still, foreign investors turned net sellers, unloading about $1.5 billion in August, a sharp reversal from July's modest net buying of nearly $300 million. Sector performance. August saw widespread sectoral gains, with financials, real estate, and materials leading the charge. The only laggard was information technology, which faced headwinds. Banking sector, bank was standout performers. The 4 largest state-owned commercial banks, Vietcombank, Military Bank, PIDV, and Vietinbank led the rally, joined by private names such as VP Bank, Techcombank, and LP Bank. Key drivers included digital asset development, IPO plans for securities, subsidiaries, and new gold trading rules. Brokerage securities firms continue to rally, led by SSI and VIX. Momentum came from optimism about digital asset infrastructure and the potential upgrade of Vietnam's market classification. Real estate, the Vingroup trio, VIC, VHM, and VRE once again captured headlines, supported by strong performances from KTH, PTR, and DXG. Facing reforms in construction law, materials, steelmaker, Perfect Group led the materials sector, likely benefiting from higher public investments. Information technology, the weakest performer was information technology, as FPT came under pressure from concerns over United States tariffs and their impact on global technology spending. Still, July offered a bright spot, and new orders up 27% year-on-year compared to less than 5% growth in first half of 2025. Macro review. Vietnam's economic indicators in August confirmed strong momentum. Industrial production and trade remained solid, retail sales rebounded, foreign direct investment picked up, and the public investment accelerated. Inflation stayed contained, allowing policymakers more room for pro-oriented policies. The main concern remains the depreciation of the Vietnamese dong, which continued even as the United States dollar weakened. GDP. The Prime Minister called for growth of 8.3 to 8.5% in 2025. To meet that goal, second half growth would need to accelerate to 9% or more, well above the first half's pace of 7.5%. Looking ahead, the Ministry of Finance outlined a bold 2026 to 2030 plan, aiming for 10% annual GDP growth, inflation capped at 4.5%, a fiscal deficit of 5%, a public debt approaching 45% of GDP. Such expansionary policies, supported by stronger foreign investment, could have re-rated Vietnam equity market. Industrial production. August index rose nearly 9% from a year earlier, driven by manufacturing. However, the Purchasing Managers Index flipped to 50.4 from 52.4 in July, suggesting momentum may cool. Trade balance. Exports grew almost 15% year-on-year in August, while imports rose nearly 18%. That pushed the monthly trade surplus to $3.7 billion, with a year-to-date surplus of $14 billion. Vietnam could also gain competitiveness as India raises tariffs and political tensions rise in Indonesia. Foreign direct investment. The spurred capital rose more than 12% year-on-year, while registered capital jumped almost 29%, signaling stronger foreign investor confidence. Retail sales. Consumer spending rebounded to double-digit growth of more than 10%, with tourism-related service up between 30 and 50%. Public investment spending surged almost 35% year-on-year in August. Notably, 250 new infrastructure and housing projects were launched, with total investment about $49 billion, roughly 10% Vietnam's GDP. Consumer Price Index (CPI). Consumer prices rose just over 3% year-on-year in August, bringing YTD inflation to 3.25, remaining well below the state bank's ceiling of 4.5% to 5%. Foreign exchange. United States dollar index weakened by about 2.2% in August, bringing its year-to-date decline to nearly 10%. Yet, the Vietnamese dong still depreciated slightly, down around 0.5% for the month. Market view. We still remain positive on Vietnam's long-term outlook. Policy reforms, stronger participation by private businesses, and changes in property laws are creating new opportunities. The government's push for infrastructure projects highlights its commitment to sustaining higher growth. At the same time, stretched valuation and shifting risk-reward dynamics call for careful reassessment and tactical positioning. That concluded the market report for August 2025. Thank you for watching, and please stay tuned for more updates from Kim Vietnam.